India's trade gap widened to $30.4 billion in June, a 5-month high. It sounds like bad news. But hidden in the same release is a record. A wide gap, it turns out, is not the same thing as a weak trade performance. The gap grew not because exports faltered, but because imports grew faster. Merchandise exports rose 15.5% to $40.4 billion. Imports climbed about 31% to $70.8 billion. When money going out rises more steeply than money coming in, the deficit widens even in a strong month. 3 categories did most of the work. Crude oil imports rose 23% to $19.3 billion. Electronics jumped nearly 44% to $13.4 billion. And gold climbed 47% to about $2 billion. Oil and gold are the perennial swing factors in India's accounts. The electronics figure cuts against instinct. Much of what India imports as components leaves again as finished phones and goods. Rising component imports and rising electronics exports move together. The import surge is, in part, the raw material of a manufacturing success. Now the record. Overall exports, goods and services together, rose 11.4% in the April to June quarter, to $232.7 billion. The highest first quarter on record. The United States was the largest market, and shipments to ASEAN and Africa surged. So how much to worry? A $30 billion gap is large, but it is a price and demand story, not a competitiveness one. India runs a goods deficit by structure and covers much of it with services earnings and remittances. The current account balance is the number that actually measures strain. The monthly gap is worth watching, not worth panicking over, provided oil prices don't climb from here. The full story is on the Indian account. Link in the description.